So we're going to wrap up the conversation on this segment of the program about the Dirty Dozen tax scams. This is the list that the IRS puts out annually every year to alert people about what to look for. We've gone through 1 through 12. If you've missed those, then we encourage you to check out our YouTube channel or our podcast channels to kind of catch that conversation. All of that you can find through our website at Nelson Financial Planning. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning. Join with me on the program, Christina Lamb, one of our certified financial fiduciaries. Also happens to be an IRS enrolled agent, so uniquely qualified to sort of talk through with us about these IRS tax scams that consumers need to be aware of. We've gone through 1 through 12. What are some of the bottom line advice for people and sort of how to kind of avoid these types of issues, if you will?
Yeah, I think just be smart, kind of be aware of what's going on, be cautious of going online, emails, even your phone. A lot of people think phones are not susceptible to stuff like that. So, and then the IRS will never call, not at least on that first contact. And then, I think just if it's too good to be true, then it probably is.
Probably is. That's exactly right. So just to stop and not just immediately react.
Correct.
Right?
Take a minute.
Take a minute and even maybe, let it sit to the next day and take a clear view on it. That's probably good advice and a lot of different things out there in life. So the reality is that no one's going to, be perfectly successful at that. So what are the things that people need to do if in fact this happens to me? Because this stuff has happened to me, and I'll share my story, but I wanted to kind of get your perspective on what should folks do if it happens to them.
Right, so you can get a PIN number from the IRS. That'll obviously help with your tax return going forward. You will have to enter it in every time you file your return. However, that is a good way if you have any tax issues to take care of that on that side. And then you can always get a credit freeze or a fraud alert on your credit report by calling all the bureaus.
Because that PIN number from the IRS, it's not one that you select. It's specifically
Correct.
Issued by them.
Yes.
And
every year it changes.
Oh, it does? Oh, okay.
Yeah. Every year it changes, and you'll get a new letter in January, and you'll have to have that. It's like 5 or 6 digits and plug it in.
Okay, and there's no way that you can pick it. It's automatically assigned by the IRS.
Correct.
Wow.
Correct.
Okay, and I did not realize that it was renewed every year as a different number. And then the fraud alert or freeze is something that just makes sense. My credit right now is under a fraud alert because last fall I had somebody going around and trying to open up loans at different banks. Things like that. So the difference between an alert versus a freeze is that if it's an alert, it's still a little bit easier to kind of use credit. And so what an alert does is it means that if any new credit applications occur, that the lender is going to be calling you and verifying. A freeze kind of really does what it says. It freezes things up and locks things down pretty good. So that's certainly some things that folks can do if in fact they find themselves victim of that. So we're with this IRS stuff as I thought it might. It certainly consumed a lot of the conversation on the program today, but important information for folks to be aware of and to understand to help protect themselves on it. We'll shift gears a little bit in the last few minutes of the program, maybe carry this on to a future program, but we want to set the table about the conversation on what business owners have in terms of options for, and maybe today we'll just talk about what business owners have as options in terms of corporate structure, because there's 3 or 4 types of corporate structures that a business owner, a self-employed individual can have, and so each one kind of has the pros and cons, if you will. So what are the 4 kind of main types of business structures out there, if you will?
Right. So you can have a sole proprietorship, which is strictly for individuals. You can have a partnership, which would be for obviously any more than one. There's LLCs, which is a limited liability, and then there's also S corps.
So walk us through a little bit of the difference between those two. So sole proprietorship is your very traditional Schedule C type of tax return.
Yep, goes on your personal tax return. As I said prior, it's for individuals, generally for small businesses, and it's also the easiest to do and the most cost effective from a tax perspective.
Because there's no additional tax
yes,
return.
You don't have
or
a
anything
whole nother
like
return
right.
where it's going to flow through.
It's just all part of your individual return, but again, it only applies if it is a sole proprietor, so single person. So and I guess that then would be lead you to the next. If you had more than one, then you might consider the next form, which is the partnership.
Correct. So partnerships are obviously for more than one person. You do have to do a separate return, which involves an additional cost there, and it passes through onto your personal return. And they still pay the FICA tax, though.
Yeah, see, that's the thing. That's the thing that I think a lot of people kind of miss, is that the FICA tax, which if you own your own business, if you're generating a profit, then beyond just the income taxes that you have to pay on that profit. If you're a sole proprietorship, if those are really effectively work earnings, then there's also the FICA tax, which for someone that is paying that, they got to pay double pay, if you will.
Yeah, it's quite substantial.
So because they're having to pay both the employer side and the employee side and the employer side. So they got to
exactly.
So it doubles it up. So folks often try and think of ways in which, okay, well, how do I get around that? And the partnership doesn't necessarily get you around that. That's just really more of a vehicle for having more than one person, if you will.
Correct. Dividing the assets or liabilities, debts, whatever.
Correct, and then that flows via a K-1
to each partner.
Each partner's tax return. So then you've got the limited liability company. So how does that one work?
So that basically offers some protection of your personal assets. Depending on your business, that may be a better option for you. And that can either go onto a Schedule C as a sole proprietor, or you also have the option to be an S Corp.
Yeah, so in Florida, an LLC, if it's a single member,
correct,
then that's treated as a disregarded entity for tax purposes, and so consequently that just kind of folds nicely onto your Schedule C, so you don't need kind of an extra tax return or anything like that. So what's the last one of these kind of four choices, if you will?
So the last one is going to be an S Corp. Again, here it does require you to have a separate return. And so there's additional cost there. It's a little bit more of a complex structure. You don't end up paying the FICA. And then also you generally have to issue yourself a W-2.
That's where the thing comes into play. The S corporation is perhaps one of the more audited amounts of corporations from an IRS perspective, because the IRS knows that, hey, probably why you set up this S corp was to avoid the FICA tax. So you have to be legitimate in terms of how much you're paying yourself as a W-2. That's the important part to remember on there. So those are sort of the four main structures. When you join us again on the program, we'll talk more about this and talk more about sort of the pros and cons and kind of what might make some sense. I guess it really does depend on everybody's individual situation as to which of those corporate structures are the best. So thank you for joining us on the program. Good stuff as always, and thank you all to our listening audience out there for joining us today as well. This has been Dollars and Cents with Joel Garris of Nelson Financial Planning.